The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 15th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to, well, just simply to provide you with the tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two. Let's start off with this one. This is a beauty. You know, there is no greater everyday virtue than cheerfulness. This quality amongst us is like sunshine to the day, or a gentle renewing moisture to parched hearts out there. The light of a cheerful face, folks, that diffuses itself and communicates the happy spirit that inspires us all. You know, true fact, people who laugh actually live longer than those who don't. When was the last time you had a good laugh? Well, I'll tell you what, I'm going to give you a good one. This is going to be a great one. If you're near your computer, I want you to go ahead and Google this in here. I want you to type in men simulate labor sensation. It's a 2-minute YouTube video. Men simulate labor sensation with a machine to see. Go ahead and check that out. You'll have yourself. Now, do it during the break. Don't do it right now. Do it at about 11:19 or so, 11:20. Here, well, of course, it depends on the time zone that you are traveling in, but give yourself about 11 minutes, but type in men simulate labor sensation. You'll have yourself a nice little 2-minute laugh out there. At least I did, and I hope that then maybe what I've done is just simply extended your life just a bit. Talking about extending the life, we're going to take a look at extending the life of this bullish run that's out here right now. Dow futures relatively flat, off 4 points. S&P down 50 cents. Composite up $3. Russell 2000 down 2 pennies. We can call that a flat market out here. Our call number is 877-927-6648. Give me a call, folks. We can take a look at your stock chart or anything else that you would like. Google up $24 this morning. That's up about 2 7/10%. Apple to the downside, off 1.5%, down $7. Microsoft up 22 ticks. Intel up 26, and Cisco down 8 cents out here. Google is leading the charge to the upside. Right behind them, we've got Netflix up $8, up 3.5%. Priceline.com, PCLN up 563, LinkedIn up 515. We've got, Solar City up a couple of bucks. Eagle Materials, EXP is the ticker symbol. They're up $1.91. Marathon Petroleum, MPC, up a couple of bucks. Wabatech Corp, WAB is the ticker symbol. They're up $2. Activist up $1.97. Sun Power Corp hitting new highs, up 9% this morning, up $1.77. Alaska Air Group lift off up $1.63. Stratasys up $1.71. To the downside, leading the charge, it's Apple off $8 and change right now. Behind them, Regeneron Pharmaceuticals, REGN. We'll take a look at that stock chart, only down about 2%, about $5 and change. Deere & Company has got some volume off of the top. Down right now about 378. That's 4%. Biogen, BIIB, that has been a rocket ship. Well, it's taken a little breather this morning. We'll see if there's any in the move. It's off $3.63. X1, XONE is the ticker symbol. One of the newest 3D company that is out there. They've created a nice little island reversal candle formation with some volume. At least it was during the first 15 minutes. We'll peek in on that, see how she is doing here after about 45 minutes of trading. We've got Fleet Core Technologies, FLT, down about 3%, off 240. Franklin Resources, good old Uncle Ben, BEN is the ticker symbol, off about 223. Alexion Pharmaceuticals, number of pharmaceutical entities just taking a little breather today. They've had a big charge to the upside. That's off about 2%, off $2. Proto Labs, PRLB, they're off $2 and change. Tenet Healthcare, THC out there, off about 4% this morning. If we take a look at the commodity market here, right now we've got gold trading off $14. Gold does want to head towards its lows out there. We'll take a look at that stock chart. You've got silver's down a little over 2% this morning off 53 pennies right now. Light sweet crude off $1.55, trading at 92.64. We take a quick look across the pond out here over in Europe. The DAX is down 14 points. The FTSE basically flat here. It's up 3 points. In Asia last night, it was green across the board. The Nikkei on its continued move higher, up another 2.25%. 337 points. The Hang Seng up 114 points. That's 0.5%. And the Shanghai relatively flat, 0.3% to the upside, up 8 points. Again, our call number is 877-927-6648. I do have the futures contract up on my screen here. If you are watching us on Tiger TV, thanks so much for doing that. Maybe you're listening on the radio or your mobile device at tfnn.mobi. Just go to the homepage of tfnn.com. On the right-hand side, you'll see the button, 3 smartphones. Click on it. The show will stream live to you. You'll be able to catch that on your little phone screen out there. And if you'd like to see this, if you'd like to see my charts, everybody else's charts in HD, just go to the homepage of tfnn.com and sign up for the Tiger's Den. Great opportunity, great time for you to be able to do that. First, you can try it out for 30 days, unconditional money-back guarantee, and we've got our Tiger Dollar promotion going on right now. So if you want to be able to make money on your money, this is the way to do it. Go over to the homepage of tfnn.com, sign up, get a 20% bonus on all of your Tiger Dollar purchases, $500 or more. There will be another 5 to 10% that will be contributed on your behalf to the One Fund out there for all those folks that we're helping out in the Boston area. So go and take advantage of all of those things. We are looking at the NQ 30-minute chart. We're watching to see if this is going to be able to get back into that rising price channel. This is the third time out of it, and so we're going to see, and it already tested it coming into the 10 a.m. session out here. I did not get into that. That's the red horizontal or diagonal line on my screen out here, right at about the price level of 3,000, maybe 3,050. So that level, we're going to watch the NQ and see whether or not it can get back inside its rising price channel. If it can't for the entire day here, folks, that would be the first time that we've seen that since it first tried, and it could be then a real break. And a real breakout is not going to be price moving higher since price is already trending higher. A real breakout or breakdown would be, in this case here, moving lower. So far, we've had 2 false alarms out there, and we'll see if we've got a third one today. Perhaps it is. Third time is a charm. So you're going to want to pay attention to that rising price channel line inside the NQ to be giving you any information as to whether a top is in or not. And you might say, well, Steve, how could there possibly be a top in? Well, one of the ways could be all the different patterns that we were paying attention to. That first pattern being the S&P 500 yesterday getting up. I mean, how did this work here where it hit the exact intersection of that 1,650 primary trading range boundary line and the rising price channel that was established coming all the way back into the April lows out there. What a beautiful sight as it hit that area. This should be an area that should find some resistance. The question is going to be what kind of resistance. Look, a normal move when you get up to the top of a rising price channel is to come all the way back down and test the lows out here. What's that going to test? Will that be in the 1,600-ish range out here? It just really depends on the timing and when it would do that. And then, of course, the key is going to be, just like we were looking at on the 30-minute chart, if it does pierce, if it does break that rising price, does it go ahead and hold? Does it stay below it? Well, we've had 2 other tests of this rising price channel. The first one back during the old sequester days back in December 31st. We actually got a break of that area on December the 28th. It broke back inside it on the 31st. That was your first test as to whether or not that trend was going to go ahead and continue. We saw another test of that coming here into the April 17th. Was set off by that April 15th sell-off that we saw in the marketplace. That didn't hold. We saw that price got back in there April 22nd and really with some conviction on the 23rd. So this is a daily chart that we're looking at. We'll see if the third time is the charm here inside the S&P. But the S&P has certainly run into some resistance. It's overbought, number one. It hit that the top of that primary trading range, number 2. It hit the top of the rising price channel, number 3 out there. So we'll see. And look, a day that just simply travels sideways, that would be normal. Typically, you do not see markets end on candles such as the one that we saw yesterday, where it basically is a long-range bar out here, wide-ranging bar, opens here at its lows, 1633.75, and basically closes at its high. The actual high was 1651.10. Closed at 1650.34. That is as strong of a candle, other than a gap up that you go ahead and paint in, as you can get. Markets typically do not end on those candles. That just means that it doesn't end today. Traveling sideways here, testing that 1650 area, continuing to close below it. That would go ahead and make sense that, okay, then we start to see a move down. That could be tomorrow. Thursday, could be Friday, could be Monday, but that's what you want to be looking at inside the S&P 500. You want to go ahead and also put that together with regard to what's going on inside the NQ30, inside the EKG of the marketplace. That was the pattern inside the S&P 500. If we go take a look at the NDX, speaking of the NQ, what we know that we've got out here is we've got a 1.272 butterfly sell pattern. 29.85 is the number. Right now you're trading at 29.92. You're certainly trading within that range. We are in overbought territory as well. No bearish candles out here, and that's really what you're paying attention and looking for. We have not seen that here as of yet as we take a look at the NDX 100. Once you see the bears show up where you've got completed patterns, it is certainly going to be a sign of caution out there in the marketplace. But right now it still looks good, and if this area does get broken, what you will see is you'll see a move up into that 1.618 price level. That's in the 3,000 and change range out there, but that's on the NDX 100. If we go take a look at, as long as we're over here, let's go take a look at the composite. The composite has the 1.618 butterfly sell pattern. Now, it is a little bit higher above the 3430 level. That's where that pattern completes. You're at 3461, so you're starting to get into an area where this pattern may be failing. We'll give it another couple of days. We can see also the rising price channel here was established, was hit yesterday as the composite made its way to 3468 out there. Still no bears in place inside the market as we take a look at daily candlesticks on the on each of these indexes. How about in the Russell 2000? Remember, that was the weak link. Will continue to be the weak link in the chain should we see a correction begin. Why we've had some big volume spikes to the downside. We'll take a look at the ETFs when we come back from the next break, but a nice wide-ranging bar yesterday as it completed its expected 1 to 1.272 A to B equals CD up. That price projection was 986.57, got up to 985.96 out there, completing the 1 to 1.272. The market breaks out. The Russell 2000 will make its way up into the 1,000 level. 877-927-6648. We'll be right back, folks.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow here is off 14 points. S&P is down 1. We got gold off $22 now, cracking into the swing point. It's trading out at 14.0220. We'll go check on that. Silver down almost 4% now, off 90 pennies. The king here is on the move. The queen is on the move to the downside, off 75 ticks right now. So let's go check in on gold. Then we come back to the ETF structures, the ETF index structures out here. But let's go peek in on gold, see what we've got going on. We'll take a look at a little intraday chart as well. Right now we can see that swing point is at April 16th level, 14.0420. We're trading at 14.02 right now, 14.0290. Volume-wise so far, and we'll go into the intraday chart and see what we've got here. You've got 124,000 contracts here to the downside. You get a close today inside 14.0420. That sets up a run to the lows out there at 13.2150. It's really good. And so let me see here if I've actually got it on my screen right now. Let's take a look at the intraday chart. There's a 30-minute chart right here. There we go. So let's take a look. Ooh, big volume coming out during the last 30 minutes right here. So volume picking up to the downside. In fact, during this last 30-minute phase here, well, the 30-minute phase that we're in right now, I should say. So coming into the 10:30 time frame, we've got about 18,000 contracts. So the biggest volume of the day taking place right here as we speak. You can see starting to get into that oversold area. but no bulls. We'll just have to see if any bulls are going to try to step in front of this little falling knife out here inside gold. So some decent volume as far as patterns or anything to the downside. Nothing here that I see just yet, nothing to stop it. If we go back and take a look at the the daily chart again, let's just take a look at retracements. We haven't done that. Let's take a look at the retracement coming off of 1321 all the way up to the high of May 3rd. And the 0.618 level, 1384.80. So expect that to be a area where gold should move down to. Then maybe we start to see some type of little sideways action out there. If it breaks 1384, that will set up the test most certainly of the well, we know that what gold was doing here, number one, it never broke outside of this wide-ranging bar to the downside. That was never a bullish sign out here when it couldn't break through that body. Body is the essence of price out here. We also know that gold had been traveling in the $50 consolidation range. The bottom of that consolidation really being about $14.25. That sets up $13.75 as the area where a normal move, at least a minimum of a normal move, would get to. So $13.84, the 0.618 area would be normal. Now, you close inside that swing point. When you close inside a swing point, in this case here, I would expect it'll be on light volume. Then it's going to be that 1321.50 area that will give us any type of a signal. That is on Goldilocks. If we go take a look at high-ho silver here, silver is going to be the first one down to the bottom of the April 16th swing point. That low in silver, $22 even. You're at $22.50. We can easily get that test today. If we take a look at retracement levels here, and on the daily chart, you can see it is approaching that sold territory, but at $22.60, and we are just slightly below that. That was the 0.786 retracement out there. That says we're going to go test the lows. Volume-wise today in silver, 35,000 contracts. That's going to be going against 200,000 contracts. It'll have to really get the caboose moving here. But what we do know is that silver has a price projection of really $17. A couple different ways to come about that. The very first way is just simply a $9, and we're going to call it a $9 consolidation area. And once it broke those lows at $26, that sets up 17. On the weekly chart, it provides us with a nice 0.786 retracement, and that's on the weekly chart, and that's going from the lows back in 2008, the low in October of 2008 at 840, all the way up to the high that was put in at $49.82. That would be a normal move, and that would be a normal potential buy point right around that $17 and change range out there. If we go take a look at light sweet crude, light sweet crude is breaking through a little short-term rising price channel, doing it with some conviction here. If we take a look at its retracement pattern now, from the low on April the 18th up to the high that was put in here, back in early May the 6th, you can see that light sweet crude now down below the 0.382 level, which is 92.86. That sets up a move down to 90.21, maybe even 88.31. That would be on light sweet crude. Natural gas, we had a caller yesterday taking a look at natural gas. That finally did yesterday break above the body of that candle from May 7th out there. We said once it broke above that, that was your bullish sign to go ahead and take a trade inside natural gas. 877-927-6648. Market's relatively flat here, trading sideways. Dow's off 13. S&P is off $1.50. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got glimmers of green out here. The Dow up 85 cents right now. S&P down 35 cents. Composite up 80 cents. Russell 2000 up 10 cents. You want to talk about a flat, yawny day out here? Well, we've got it in the marketplace. That's not the case when we take a look at some of these movers and shakers out here. Moving the markets, you've got Google up $18 right now, and shaking the market, you've got Apple to the downside, down $8. Let's take a look at some of these equities out here that are moving and grooving. Let's go take a look here at Regeneron Pharmaceuticals. REGN is the ticker symbol. They are the in the clubhouse here, number 2 right behind Apple, REGN. I'll learn how to type here momentarily. So let's go take a look at it. This can't be the right chart. Let me refresh my screen here. Maybe it could be, but let's take a look at it. There we go. I knew that wasn't accurate. We take a look at Regeneron Pharmaceuticals here. Pulling back today, let's go take a look at the volume on this, see what that is doing. Most recently had a real nice breakout here. Big volume day. I don't know what's behind this big volume move here on April 30th, 15.3 million shares, but a nice wide-ranging bar on May the 1st out there with 4.7 million shares. Little bear sash candle we've got going on here at the highs. Volume so far, 200,000 shares. Yesterday's high was made with 1 million shares. We're an hour into trading, so not really a big deal that we're seeing here on Regeneron Pharmaceuticals. No real substantial volume off of the highs here, so just maybe consolidating some of its most recent gains. That was on Regeneron. Deere, let's go back and take a look at Deere. They were out with revenues here before the bell. That is down with big volume. We're seeing big volume off of the most recent high. That was yesterday out here. Volume so far, 4.5 million shares to the downside. It made a high yesterday at 93.88, did it with 3.6 million shares, going right into the first breakdown, the first sign of institutional selling from February 13th out there. 8 million shares, 93.90 was that number. That had 8 million shares, as I said, to the downside. You're going to surpass that today, only an hour in trading and 4.5 million shares. So you're seeing some volume off of the highs here. The area of support that's been tested here inside Deere will take you back to the high volume bar on November the 21st. We'll put a black line across my screen here. Looks like that is the area where Deere is headed to, right around 82.06 or so. That has been an area that did hold as support. That was on Deere & Company. DE is the ticker symbol. X1, one of the 3D companies out here, that's got an island reversal. Let's go check in on that, take a look at the volume. You do have the bulls here. Now, well, maybe it does not have an island reversal. How about that? It most certainly did, but looks like that now has been vanquished out here. The low of yesterday was 45.84. So far today, we've had a high of 45.80. No, you got a 4-penny little island out there. So you still got an island reversal. You've got some pretty big volume out here so far today. 2 million shares have made a high out here yesterday with 1.5 million shares. So we'll see here. Looks like the bulls are really trying to defend their position. Early on, we were taking a look at this equity here, and it had a 2-day island reversal, meaning the session of May 13th as well as yesterday. But May 13th no longer the case, and it's just really yesterday. Again, 45.84. 45.84 is the low of the bar on May 14th. The high so far today, 45.80. So we still have a little bit of an island out there. That is a bearish sign. That was on X1, X-O-N-E, being the ticker symbol. Let's go check in on BIB, B-I-I-B. That has been a rocket ship in the marketplace. I believe this is quite overbought. No, it's not that overbought out here. So let's go take a look at it. It did make a nice higher high yesterday. Let's see if there was some volume behind it. There was 1.9 million shares. That was taking out a high that had 1.6 million shares on April 30th. So far today, the pullback, just an inside day. Light volume as well, 295,000 shares out there. So lighter volume than the high that was made yesterday. Everything at the moment still looks good with BIB, Biogen, B-I-I-B out there. Let's see here. We've got Cooper Cosmetics, maybe? Let's see here. Cooper COS. Let's see if that just Cooper COS. Let's see what they actually do here. They operate a medical device company. They market contact lenses, spherical lenses, to correct near and far-sightedness. Let's go check out Cooper, COO. They're having a little bit of a down day today. Let's see if there's any volume behind this move. It's off about 2%. So let's pull this back on the stock chart screen here. Let's go see what we've got here. So far, volume. Now you've got some volume here. Now, this is not the most heavily traded equity. Yesterday, as it made its high, 319,000 shares. The day before, 308, and before that, 187. Today, though, 184,000 shares off of the high, little gap down. So this is going to come and it's going to test this little breakout area, little breakout session, high volume area from March 8th. That's going to be right around 109.56 to 103.57. 103.57 looks like that area has held as support as we draw a horizontal line across our screen. So it looks like Cooper, COO, is going to head down to about the 103.57 mark. It's trading at 111.79 right now. Let's go look to the positive side here. We looked at Google. Let's go check in on Priceline, see what it is doing. PCLN is the ticker symbol. That is trading up here this morning. It's at 803.19. So this looks like this is at all-time highs as well. Yes, it most certainly is. Let's put this on a weekly chart. Take a look at the weekly chart for Priceline out here. Up over its 2012 high, April 13th, 774.96. There were 8.2 million shares on that trading week out here. So far through yesterday, you're up with 1.8 million shares going against 8.2. We'll see if it can really get some volume picking up to the outside up here. And Priceline, boy, what a rocket ship this thing has been in. If you come back off of the lows here, $52.98. People talk about Apple. This is a better mover than Apple by far. October 31st, 2008. 15, you're trading at 802 right now, so maybe people ought to just kind of let that whole Apple thing go here. Priceline has had a better return than Apple. If you go back to Apple in 2008, let's go actually do that out here. Make sure that I'm actually right about that. I would hate to give you bad information. Let's just go ahead and put the Apple chart on this screen as well here. AAPL. And if we do that, well, I know compared to where it's at right now, that's a no-brainer. Let's go see what Apple was trading at back in the weekly chart here back in 2008. And in 2008, you were down at the $139 range out there. So Apple gets all the accolades, but it's really Priceline that has been the better performing stock out there, and most certainly the better performing stock when you take a look at where Apple is trading right now, out at 435.46. Let's go peek in on the daily. Let's see what kind of volume we've got here so far inside Apple. And it's at the lower range of its Bollinger Band here right now. That low is 433.50 today, 6.6 million shares. Yesterday pulled back with 15.9, so it's got some real volume here to the downside. This suggests at least a test of the sweet 618 retracement level right around 415.91 in the marketplace. Netflix, that is moving and grooving. She wants to go head back to its highs out there. Let's see, LinkedIn is trying to make its way up to its island top reversal. We've got Copacabana, CPA, Copa Holdings out there. We looked at them yesterday. They're up 3%. Let's go take a look at YRC Worldwide. That is up 19%, so that must be moving the trannies out here pretty large. YRC Worldwide. I do not see any news behind YRCW, but this thing is moving for sure. Let's go see what it is doing. YRCW. And let me go ahead. This thing has had some big volume in it here recently. Boy, the stock chart looks a little weird. Let's refresh it, see if we can get some good data. Man, I must have something really bad. Was YRC, were they really at $284? There must be something wrong with this. There's got to be something wrong with this stock chart out here. It says that they were selling for $35,000 back. So my apology. I don't know where my bad information is inside YRCW, but we're just simply not going to look at this stock chart because there is something that is really wrong there. I'll have to delete that during the next show and figure out why I've got some really bad imported data out here. But I can tell you that it is up $2.90 out here, up a nice 19% right now. Sears Holdings, that's on the move. SHLD, if I shoulda, coulda, woulda. Let's go see what SHLD is doing. Up, let's go take a look at the volume, see what this is trading into. It looks like it's up through its resistance level. That's what it's trading into today. Sears Holdings had a big downdraft on November the 16th, 6.6 million shares to the downside. That left the low of November 15th at $57.80. You're trading at $60 even right now, so it is out there repairing that window of resistance. Nowhere near the volume of that downdraft, but nonetheless, if you get a close above 59.28 and you're at 59.94 right now, you will have repaired that window inside Sears Holdings, and you likely are going to have an A to B equals CD up. Let's see if it's confirmed. We're looking at a B point of March 15th, 53.36. That had 1.2 million shares, and you're up over it with 1.2 million shares, so you do have the volume for that. So it looks like Sears Holdings here wants to go ahead and make an A to B equals CD up, and that will take the 1-to-1, well, not much higher than where we're at right now. At 60.57, your 1-to-1.272 takes you to 64.61, and that would be back, taking you all the way back to the highs of November 6, 2012, well, really the low of that high bar, which is 65.08 out there. So it looks like Sears wants to head to 64.61 out there in the marketplace. What a be a nice move out here, but this thing, is going against this real little breakdown area here from March. How about November 16th, 2012, 6.6 million shares to the downside. Let's see, what else do we have out here? Let's go take a look at bonds. We got 4 minutes or so left in this session. Then we'll go take a look at the ETF structure. I bypassed that earlier, so we'll go see what's going on inside the IWM, the SPYs, the Qs, the diamonds out here. We're taking a look at the bonds here. Bonds trying to hold the 0.618 retracement level. That was coming off of the low from the trading session on March 8th, 140.14 all the way to the high. That was put in on May Day, May 1st out there, 149.21. The 143.30 mark, that is the area we're trading at 144.08. That area was breached just slightly yesterday. That area has held again. So bonds here have made a 0.618 retracement while getting into or moving near the oversold territory. Each time bonds have gotten down to that level, and we can take a look at the last time down there was on March the 8th. That area held, and we saw some bullish engulfing candles out here, and bonds went ahead and made that nice A to B leg out here. This could just be nothing more than the B to a C of a large A to B equals C to up. That is done nothing more than the normal 0.618 retracement. We take a look at that. Let's assume that we get a nice bullish candle today. The 0.618 level would be defended. That would take bonds all the way up to 152.25 out there. And if we take a look at the expansions, well, I don't know if I can really do it like that. Give me a minute here. I need to go back to the continuous contract in order to do that. So I'm not going to do that at the moment here, but it looks like there is a possibility that bonds here could be forming the B to a C of an A to B equals CD up here. Now, if bonds do not hold this 0.618 level, they should travel not just all the way down to the 142.13 level. That would be the 0.786 area. I would say they'll go down and actually visit the 140 mark. Now, if they do that, that should be enough energy to wipe out all of these other patterns that we've looked at inside the marketplace. But if that doesn't happen, if this 0.618 area does hold, you've got a nice large A to B equals CD up. Now, I don't believe that price point gets Larry in the boat out here at 152. I believe we've got to get bonds up to about 159 in the marketplace in order for that to happen. And that would happen if this turns into a 1 to 1.618. A to B equals CD to the upside. So pay attention to bonds. You know we're paying attention to that 30-minute chart of the NASDAQ futures here. Right now it is trying to get back up into the rising price channel. We'll see if the third time is a charm. So far it is not the case. The number there that you're looking for is just over 3,000. We'll call it 3,001. Right now you're trading at 29.97. A quick peek in on the ETFs. Let's start off with the diamonds. So far this morning, an hour and 18 minutes of trading. We've done 1.1 million shares. Had decent volume yesterday, 5.5 million shares. Can still have some more room to run to the upside. If we take a look at that rising price channel, you can see the diamonds get into about the 154 area. So I don't see any real resistance. If we take a look at Fibonacci expansion inside the diamonds here, you're up over the 1.618 level. So 153.08 would be the 2.0 level. That would be inside the diamonds. Different case inside the Qs here. The Qs themselves have formed that 1.272 butterfly. That was to be expected after the 0.786 Gartley sell pattern had failed. 73.10, I believe, is the actual number. Right now we're trading at 73.54. Still no bearish candles in sight inside any of these ETFs. Right now we've got the Dow off 16, S&P down 2. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. A relatively flat market out here still, but so many road signs that as we're driving along the market making these highs out here, so many road signs that are saying caution Will Robinson out here. One of those here being the chart we're looking at on Tiger TV up at the upper portion here. I've shown you this in the past. The best correlation in the currency pair cross rates out there to the S&P 500. That is the euro, Japanese yen, and the currency market, is the one that rules out here. If you're looking at my screen here, you can see the divergence divergences that I identify. The bottom chart is the actual euro-yen cross pair when that is a leading indicator. And in this case here, if we go back to the lower left-hand side, you can see as the S&P were making a low coming into the January time frame, we had the euro-yen that was saying, no, I don't think so. The market should start to move higher. There was a divergence there. In fact, the market did go ahead and begin moving higher, as we know, back in the I don't have the exact date on this. I can't get the date exactly, but it looks like right around the January 28th time frame. Is that no, that was December 28th. I just have to wake up and smell the roses here. In any event, take a look here at the time period where the euro-yen is moving down. This is the time period of the early part of February. So that started heading down. We had the S&P moving higher. We saw a little bit of a correction coming into that February 25th time frame. We saw the market, we saw the euro-yen cross pair moving down from about the middle of March through April. We finally saw a little bit of a price correction on that April 15th time frame area. Now what we are seeing here on more of the, now it was fine here. We saw the actual, as the market was moving down here into the time frame of April the 20th or so, what we actually saw was we saw the euro itself, euro-yen cross pair was actually moving up, was making higher lows out here. And now what we're seeing with the market, if I take a look at more of an ultra short-term time frame, we're seeing a turn down in the euro-yen. So there are caution signs, there are all kinds of caution signs in driving down this bullish road out here in the market. There's plenty of them. I'll give you one more out here. This is the one that probably is a real large one, and this is the VIX index. Basil has one use for it. Larry maybe has another. Tom another. I've got one where I just really take a look at divergences inside the VIX versus what's going on inside the market. We have seen the VIX here. If you take a look for divergent patterns, they're also identified on my chart here. So we can see the VIX is clearly making higher lows out here as the market is moving up. That is a divergent pattern. If you want to understand another time period where we saw something similar, well, let's just take a tour back in time. And as we take that tour back in time, we got to keep going back to the lower left-hand side of the chart out here. And I've shared this with you. I've done the actual homework on it. Now, if you take a look at the original, the first highs made in 2007, what you'll see is a very similar VIX pattern to what it is that we have going on right now. Market was also making some higher highs. Wasn't the final high back in July, but it was the high in July that, in essence, was during that 6-month unfavorable time period. And price on August the 16th, just for the heck of it here, moved down into a low of 1370.60. That happened to match, quite frankly, the 200-day EMA that was in place on April the 29th. That's this little red line going across my screen here. Let me just pull this down. It'll be a little bit easier to take a look at. So you can see the 200-day EMA, and that was part of the sell in May. That is what's going to take place again this time. So I've given out the numbers in the past. When sell in May does kick in, it's going to pull all the way back to the 200-day EMA that was in place on April 30th. Folks, stay tuned. Basil Chapman is up next. Have a great trading session, a great day. I look forward to seeing you tomorrow morning. Take care, folks.